Now, Nigeria's equity sustained largely bearish trend across the 10 sessions. Interesting times for the markets this time, as the market is coming up with as we'll find out what the GDP numbers mean for the equity space in Nigeria. And Andrew Tsaku is a trader at Kapital Care Trust, joins me now for this conversation. Thank you so much for your time on the show, Andrew. And let's first start off with the GDP numbers and how are the markets taking it.
You rightly pointed out in your story, the GDP numbers came out a little more in the negative, 6% plus, after a very long time of having tried to remain in positive territory. That hasn't, of course, come as a surprise because given the effects of COVID-19 and all that, it was very much anticipated. All said, the equities market, interestingly, has defied those numbers today, having posited a positive in that direction.
All right, Andrew, but looking at some of the hardest hit sectors, when you look at the GDP report, by how much will those numbers then influence how traders play in those sectors?
One of the key things you would readily ascribe to is the fact that, the market has very much been perturbed to an extent in the early quarter of the year, particularly at the commencement of the COVID-19. However, we've continued to see some leverage coming along the line, particularly against the numbers of listed companies. A good number of them have actually surprised investors by the kind of results they have brought along the line. So to that extent, the market has shown much more sentiment in the positive territory rather than the negative. And that's part of the reason you keep seeing the market, bringing up some kind of positive performance.
All right. Well, looking at the sector's performance, though, we're looking at the telecoms and agri sector also, performing quite good and standing out from the pack. How do you think the market players are going to play on the stocks that in those areas?
One key sector actually that has dominated the market space over this period is actually the financial services sector. Agri, particularly today, has had some uptick, given the fact that Fresco particularly stood out, in terms of volume of activity, and that puts it in the positive territory. However, market has largely been driven over this quarter by, the performance of the financial sector stocks, particularly the likes of Zenith and GT.
All right, but let's get into the market performance today. We're seeing that marginal gain here from the market today. We're seeing the market is up 0.02%. What were some of the key drivers of today's trading session?
Like I said, one of the main drivers, has remained, the financial sector. If you look at the statistics, both in terms of volume and value, so much of dominance has been exhibited by this sector. And that's also understandable if you, take into cognizance the fact that a number of sectors have remained very much in a lackluster territory, given the fact that the lockdown, had been on course for a while. Yeah, there's gradual easing, and we're looking forward to much more. But, of course, the financial services sector have not been totally closed, given the fact that, whether people do business or they don't do business, some level of activity will still be taking place, particularly in the consumption side. And for you to consume, you need resources that are warehoused by the bank. So to a large extent, the banks have remained in business, even though at some moderated level. So we'll continue to see some dominance coming from there. The consumer space too will do some much more, given the fact that consumption will take place, whether you're looking at products or services, or even in terms of expansionary activities along the lines of infrastructure. so the likes of Dangote, WAPCO, and those in the cement business will enjoy some level of patronage.